Thank you, Liza. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And salam sejahtera dan juga selamat Hari Raya Aidilfitri kepada semua orang. Selamat datang saya ucapkan ke sidang akhbar Bank Negara Malaysia mengenai laporan tahunan tinjauan ekonomi dan monetary serta tinjauan kestabilan kewangan. And welcome to Bank Negara Malaysia's press conference on the annual report, the Economic and Monetary Review, and the Financial Stability Review. Allow me to start by setting the broader global context that we now operate in. The global economy and our operating environment are being shaped by several major shifts. Geopolitics is no longer a backdrop to economic outcomes, but one of the main drivers. The model for international trade and rules of engagement are rapidly changing. Economic decisions are increasingly shaped by national security, technological competition, and supply chain resilience. The result is a world that is more geopolitically fragmented, but remains economically connected. Not only does this heighten uncertainties, but as the chart shows, shocks also are transmitted more quickly in this global landscape. We could see this shift in the rise of tariff. Last year, in 2025, countries faced the prospect of sharp increases in US tariffs, with some proposals exceeding even 20%. Much to our relief, the realized outcome was less severe than initially feared. Pauses, exemptions, and negotiations softened the immediate impact, while front-loading boosted near-term trade volume. But the broader direction is clear. US tariffs are now embedded in the global policy landscape. Firms now make investment decisions under persistent trade policy uncertainty. Supply chains are redesigned for resilience and strategic alignment, not just for efficiency and scale. And over time, this poses higher costs and a drag to global trade and investment. The second outcome, the resurgence of energy risks, amplified through geopolitical flashpoints. The conflict in the Middle East shows how quickly geopolitical events can spill into energy markets. The impact depends on the duration of conflict, the extent of damage to key infrastructure in particular, and the degree of disruption to global insights, to global logistics. And how is this transmitted to the world economy? First, higher oil prices and shipping insurance premiums raise costs, pushing inflation higher. Second, supply chain disruptions affect cross-border flows of goods and services, especially critical inputs for key sectors, weighing on growth and trade. And third, financial markets respond with higher risk aversion and tighter financial conditions. The negative impact to the global economy could also be amplified by the weaker sentiments. But we must also recognize that global energy sources are now more diversified and strategic reserves are sizable. This ought to help mitigate some of the impact from the conflict. Nonetheless, we also see the continued surge in technology investments. Rapid advances in artificial intelligence are driving strong demand for semiconductors, data centers, and digital infrastructure. Some experts view that we are still in the early days of this technological advancement. This investment cycle has become a major source of support and a key reason the world economy has fared better than what we expected. In light of the challenges and heightened uncertainties, the global economy is expected to grow more moderately this year at around 2.7 to 3.2%. Notwithstanding tariffs and geopolitical uncertainties, three factors should continue to support global growth. First is sustained domestic demand. Second, the supportive macroeconomic policies. And third, the continued strong investment in technology, particularly in AI-related infrastructure. We recognize the outlook is highly uncertain, with the balance of risk tilted to the downside. Let me now turn to Malaysia. Although the year 2025 was extremely challenging, the domestic economy navigated it very well. Growth reached 5.2%, while inflation remained low at 1.4%. Domestic demand stayed firm, and exports showed resilience. Credit to the private non-financial sector grew by 5.4%, with SME financing expanding by 5.9%. Of significance, the ringgit steadily strengthened throughout 2025. Continuing from 2024, the ringgit once again performed well last year, appreciating against the US dollar and key trading partners. Global factors such as the dollar performance played a role, but so did our domestic strength. Year to date, this positive trajectory has continued, although the recent developments are causing some movements. And going forward, the ringgit will remain driven by market conditions and global forces. And towards this end, Bank Negara Malaysia is committed to ensuring an orderly markets. This brings us to the outlook. Malaysia enters 2026 from a position of strength to navigate the challenges ahead. Our strength lies in, first, the diversified growth drivers with cushions to preserve external sector strength. Second, the healthy balance sheet positions among households and firms. Third, the strong financial sector that supports the economy to grow. And fourth, the sufficient macroeconomic policy space, both monetary policy and fiscal policy. And taking into account all these factors, the Malaysian economy is expected to grow at a resilient pace of between 4 and 5% in 2026. Now, let's look at the drivers of growth. Household consumption remains a key anchor of growth. Income prospects are positive with continued income growth. Labor market remains firm, with unemployment expected to remain near its decade low at around 2.9%. Targeted policy support are also in place to help Malaysians in need. On investments, the positive news is investment approvals continue to increase, reaching to 427 billion ringgit last year, while implementation rate for manufacturing projects remain high at around 85%. Clear policies and incentives, diversified supply chain, and strong infrastructure, as well as skilled workforce, are among the factors that attract investors. We see private sector capacity expansion gaining traction, led by the ICT and the E&E industries. We also see progress under the national master plans and major public investments, including renewable energy and the transportation projects. The realization of these investments will strengthen Malaysia's productive capacity for the future. Moving on to trade, while the external conditions are uncertain and challenging, real exports growth is expected to be moderate at 2.8%. Despite the headwinds, there are three points that's worth noting. One is that we have a diversified export base. No single country accounts for more than 16% of our exports. And across products, Malaysia also exports different goods and services, from commodities to advanced services. Number two, rising data center investments, lifting the ICT services exports with wider spillovers across industries. And third, supported by its deep roots and linkages, our E&E sector is well positioned to gain from the global tech investment cycle. Not many countries can showcase such a diversified external sector. I want to spend a few moments on how well our E&E industry has advanced. If we think of GPUs as the brains of AI, Malaysia supplies the nervous system and other vital organs to the brain. Everything from power chips, which is the heart, optical transceivers, the eye, and the high-speed connectors, which is the nerve. While Malaysia continues to gain a steady foothold in the leading-edge chip fabrication segment, the country is strengthening its capabilities in advanced packaging and front-end activities. And this will keep us competitive beyond the current E&E cycle. Tourism also stands out as a source of strength for the economy. Last year, the tourism industry helped turn a 14-year deficit of the country's services account into a surplus. This momentum is expected to continue this year. In conjunction with the Visit Malaysia 2026, steady visitor arrivals this year, particularly from Asia, will generate positive spillovers across retail, transport, and also hospitality. However, a word of caution, developments in the Middle East could pose downside risks to these projections. Moving on to inflation outlook. In 2026, the headline inflation is projected to be between 1.5 and 2.5%. Given the external developments, global cost conditions are uncertain at this juncture. However, underlying inflation is expected to be broadly stable amid the steady domestic demand and economic activity. Domestic policy measures will also help limit the pass-through of global cost pressures on domestic prices. Let us move to the risks to growth and inflation. We enter 2026 from a position of strength. But strength does not mean total immunity. There are key risks to the growth outlook that we must continue to monitor, assess, and manage. Downside risks are mainly external in nature, arising from slower global trade due to Middle East conflict and tariffs, alongside the lower commodity output. On the Middle East conflict, the situation is highly fluid. Developments on this front change by the day. The effects of the world and Malaysia will depend on the length and the severity of the conflict. There are, however, some upside potential that could arise from better global growth, stronger E&E demand, and also more robust tourism. As for inflation, upside risks stem mainly from external factors, driven by geopolitical uncertainties. Let me now move to monetary policy. First, our economy can face the headwinds coming our way, but monetary policy will continue to play its part to safeguard this resilience. Last July, we lowered the OPR by 25 basis points, and this was to preemptively ensure support is in place should pressure intensify. As we move into 2026, our focus remains very clear. This is to maintain price stability while fostering conditions that support sustainable growth. The MPC will stay vigilant to emerging risks, with decisions guided by assessments of risks to Malaysia's economic outlook. I have shared at length on growth prospects. It is resilient and broad-based. Crucially, the financial system is also in a good position to support this growth momentum forward. What do I mean by this? First, we have a financial system that can withstand shock, ensuring financial intermediation continues even under stress. And second, our financial sector is stepping up to meet the needs and challenges of the modern economy. Let me elaborate on this. First, banks and insurers continue to operate with strong capital positions and ample liquidity, providing a stable foundation for the economy. Every year, we put them through stress tests to gauge their resilience. And this year's results showed that even under stress scenarios that are more severe than what we saw during the global financial crisis and the 2020 pandemic situations, banks' aggregate capital ratio remains well above the regulatory minimum. What does this mean? This means banks have the buffers to absorb losses, and even in challenging conditions, they can continue lending and supporting financial intermediation. Similarly, insurers also demonstrates the ability to withstand shocks while providing protection to households and businesses. Now, turning to borrowers, the overall repayment capacity of businesses and households is sound, with the share of risky and impaired loans remaining low. The majority of businesses are able to meet their debt obligation, while pockets of stress among a small segment of the MSMEs remain still contained. Households too have healthy and stable debt servicing ratio, with limited signs of the broad-based stress. Resilience also means credit continues to flow to power the economy. Even amid uncertainty in the recent period, access to new financing remains intact for both households and businesses. Banks continue to extend credit, mainly for working capital and investment, supported by strong balance sheet and prudent lending standards. This reflects the financial system's key role in supporting adjustments and growth rather than amplifying stress. Yet, resilience alone is not enough. And this brings me to the second point. We have a financial sector that is stepping up to confront today's challenges and future-proofing Malaysia's economy as we go forward. And to this end, there are four main areas we have been putting our weight on. First, risk protection reforms to tackle structural challenges in the insurance and takaful industry. Second, advancing value-based finance to drive sustainable and inclusive growth. Third, further modernizing our payment systems for people to use safely and affordably. And fourth, strengthening fraud prevention and safeguards against illicit activities. In June last year, along with the Ministry of Health and the Ministry of Finance, the Reset Initiative was launched as a long-term response to address the underlying drivers of healthcare costs. In 2026, focus will be on implementation, which includes rolling out the pilot for the base MHIT plan, transitioning to diagnosis-related group or DRG-based payments, strengthening private healthcare regulation, standardizing hospital billing practices as part of our transparency process, and accelerating interoperable digital medical records. As for motor insurance, with the foundations in place through the e-police reporting and the digital roadside assistance, the priority now is execution. Translating this initiative to real-world adoption and better consumer outcomes through stronger accountability and collaboration across the ecosystem. A word on value-based finance. Value-based finance aligns financial services with societal outcomes, promoting sustainable and ethical financing beyond profit maximization. Our focus on this front is clear, that is harnessing today's finance to ensure tomorrow's growth is sustainable and inclusive. Of note, Islamic finance has pioneered the value-based intimidation or VBI-aligned initiatives since 2017, supporting MSMEs, the green economy, and the underserved communities. Looking ahead, we are working hard to expand value-based finance to the entire financial system by empowering businesses through innovative value-based solutions, scaling sustainable and social finance, supporting an inclusive transition to greener practices, as well as building resilience against climate-related events. Inclusion today is not just about access. It is also about safety and affordability. Malaysia's digital payments ecosystem has expanded tremendously, allowing consumers today to transact through various forms of digital payments. For businesses, especially the small ones, this means easier access to digital payments as they have broader customer reach and more convenient cash management. Advances in e-payment adoption now places Malaysia second globally. To future-proof this progress, we will continue to modernize the payment infrastructure, including testing real-world use cases for tokenized deposits and stablecoins through our Digital Asset Innovation Hub. As payments digitalize, fraud risks also evolve. Preventive measures such as the deployment of more advanced fraud detection and strengthening the malware defenses are showing results, with 1.2 billion ringgit in fraud losses was averted in 2025. This is 12 times higher than the actual loss reported to Negara, Malaysia. The National Scam Response Center, the NSRC, now under the PDRM and also the MCMC, enables faster response at scale. And Malaysia's upgrade to the highest tier in the FATF mutual evaluation also reinforces international confidence in our financial system as safe, credible, and transparent. Do take a read of the report. It's very comprehensive and very rich. In summary, Malaysia has a financial system that is not just able to withstand shocks, but it also enables growth, protects trust, and evolves with the needs of people and the economy. With the current financial sector blueprint coming to an end, we are now working on the next plan to set priorities for a more dynamic and competitive financial system. Our early thinking is moving in three broad directions. First, how finance can do more to catalyze resilient and dynamic growth. Second, how do we further strengthen the foundations for the coming decade? And third, how can we provide clearer policy direction in the areas that matter most, such as innovation? In the coming months, we will be engaging a wide range of stakeholders from the financial sector players to everyday rakyat for insights that can sharpen the strategies for the next blueprint. Before I stop, I would like to touch on my favorite topic, structural reform priorities which are critical to Malaysia. Over the years, Negara has been a strong advocate of structural reforms. Much of today's economic strengths are the results of reforms of the past. Some recent measures, such as the fiscal governance, investment policies, energy tariffs realignments, and Budi 95, addresses long-standing distortions and strengthen our long-term growth foundations. With this groundwork in place, Malaysia's path forward should rest on several key priorities. First, building external resiliency, given the more fragmented and tech-driven world. We must continue to invest in AI and tech-ready infrastructure, gearing up for future global challenges. Second, labor market reforms, strengthening talent retention and raising incomes, thus addressing cost of living pressures. Third, advancing social protection to lift our people through upward mobility pathways and more targeted and integrated assistance system. This is an important area to enhance our socio-economic fabrics, to create a more resilient and equitable environment and improve the overall well-being of the rakyat. Fourth, mobilizing financing for the new growth sectors. Ensuring efficient financing flows to priority sectors is crucial to support innovation and drive Malaysia's next phase of growth. Negara Malaysia has recently established the Financial Sector Engagements Platform, we call it the FSC platforms, to develop practical financing solutions for key economic sectors. And this will support more catalytic financing, which will enable banks to play a stronger role on this front. We articulate our findings, analysis, and policy thinking publicly. Across the 3 flagships that we are publishing today, we feature 7 box articles that address key issues ranging from everyday inflation experience and trade turbulence to topics on inclusion and trust in finance. I invite you to explore all these feature articles. Now, let me summarize before I finish. Global uncertainty will shape the road ahead, and that is certain. However, by sustaining domestic demand, steadily executing investments and reforms, and ensuring a resilient, inclusive financial system, Malaysia is well positioned to meet this challenge with confidence. Finally, I would like to take this opportunity to express my heartfelt appreciation to the Board of Directors and our partners from government agencies and industry players in the country to international counterparts whose shared purpose and collaboration have been instrumental in advancing our collective goals. And to all my Negara Malaysia colleagues, terima kasih for all your professionalism, dedication, and a quiet commitment to public service. Your work, often unseen, makes a real difference to the households, businesses, and communities across the country. The challenges ahead will require continued cooperation, trust, and resolve. By working together, we can ensure that the financial system remains a strong enabler of economic progress and social well-being. And we owe this collective effort to the 34 million Malaysians we serve today and beyond. With that, my team and I will now be pleased to take on your questions. Thank you very much.
Thank you, Governor. At this juncture, we would like to call for
Kerana
questions
ini
from the
menentukan
media.
jumlah yang Malaysia perlu bayar
We
untuk
will take your questions in 3 segments. The first on economic topics, the second on financial sector topics, and the last on other topics. If you have any questions, please feel free to raise your hand. Our colleagues stand ready to pass you a mic. Please state your name and publication before sharing your question. Now, I would like to invite questions from the floor on the first segment, the economy. We will take a few questions at one go. I see the hand from Afrina, TV3. You first.
Hi, Governor. Afrina from TV3. So previously, the government mentioned that they project this year's GDP to grow between 4 to 4.5%. So what makes BNM optimistic to put such target from 4 to 5% given the continued uncertainties? For example, yesterday we saw another strait, Bab el Mandeb, has been threatened to close, which will escalate the oil prices further. So our fundamentals really that strong. Thank you.
Can I have another question? Okay, Emir from The Edge. The gentleman in front.
Thank you. Good morning, Dato' Sri. Selamat Hari Raya.
Okay,
Following up to
tadi.
the...
Siapa tadi?
Emir Zainal from The Edge.
Adrian?
Emir. Yes.
Thank you.
Following up to the previous question, may I know what's your worst case scenario if the war in Iran drags on beyond 6 months? And how far into the future is BNM doing your stress tests? Thank you.
Can I have another question? Melissa here from CNA.
Hi, Governor. You spoke about reform and Budi 95. I wonder what you think of the runaway subsidy bills now. Is it sustainable? How is it going to stress our fiscal position?
Okay, Governor, perhaps we can take the first three questions, something to do with whether we are optimistic on growth forecast, worst case scenario, and the other one on reform and Budi 95.
Thank you, Lisa. Thank you for all the questions. I think I'll just do the growth questions first, and then in terms of the scenarios that we're looking at, also in terms of the subsidy bills, whether it's sustainable or not. Okay, on the growth, when the government came out with the projection of 4 to 4.5%, that was last year, and that was before our third quarter and fourth quarter growth performance. So the third quarter and fourth quarter, the performance was very good. And as you know, that I think we grew at a high pace, given the support, especially coming from the AI developments and data center. So that has been taken into account in terms of the projection for this year as well. And 2 points that I think I would like to highlight. Number one is in terms of this year, the growth will be sustained in household spending. We see that household spending is resilient given the positive labor market conditions and the continued income growth. For example, unemployment is at the lowest, 2.9%, and wages is increasing. Second is that we do see a robust momentum in investment activity. We have seen last year strong growth in investments. We have the multi-year projects of investments coming through, and they are at the various stage of implementation, and this will continue. And in addition to that, there are also new investments coming into picture, both FDI and DDI, to support all the plans that we have. For example, the NETR, the NIMP, the NSS, and also the 13th Malaysia Plan. So there are projects ongoing. And these projects are for infrastructure, roads, hospitals, schools, and education. So these are the second point that will support our growth for this year. You could see in terms of the investment realization is also very high, at about 85%. So they are happening. Lands are being cleared, buildings are being built, machineries are being installed. So it's happening. Third is that tourism has also supported us last year. And while we acknowledge there could be some adjustments based on what's happening in the Middle East, but we still believe that the tourism will continue to support our growth this year as well. And fourth, export. Our export has grown last year. And this year, while again the tariff could have some impact on export growth, but we have to understand that we have a very diversified export structure in terms of products and also in terms of market. And second is that we see a strong demand on E&E last year, and this will continue into this year, especially with the continued growth in the AI developments globally. In fact, apart from the macro data, we also do engagement, on-the-ground engagement with companies, factories, MNCs. And so far, the order books for the E&E that's supporting the AI developments and utilization is strong. For the next 6 months, the order book is solid, and it stays that way. There's no cancellation or whatever. Second is that the investment intention of all these companies as well remain the same. If you compare to last year, when we did the engagement, there were some that says that they might wait and see for a while because of uncertainty in tariff. But this year, given the strong demand in AI, the investment intentions continues as well. So that's the export market. So these are all the factors that will support our growth. And don't forget, I shared just now, we have a strong banking system that will continue to be able to provide intermediation to the economy to support growth. So these are the points on growth. Your question on the scenario. Of course, given the developments, we have taken on board some of the possibilities of scenarios in place. Of course, we look in terms of the extent of disruption, in terms of how long this conflict will last. In fact, our baseline talks about 1 to 2 months, but our likely scenario will be 3 to 6 months. And of course, we have a tail risk scenario of more than 6 months. That's one angle that we look at. Second, we look in terms of what will be the severity of this conflict in terms of the damage to infrastructure and the rest. This is something that is still not very clear. Because with the fog of war, things are uncertain, ambiguous, not clear. The damages are being announced, but again, until the things settle, then you will know what actually happens to the infrastructure. So this is where I think we need to be vigilant and continue monitoring on all this and how this will then impact in terms of oil prices and so in terms of global growth. So these are the things that we look at. And we also look in terms of what are the scenarios for the oil prices. I'm sure our baseline is at between 70 to 90 US dollar per barrel. For your information, the year to date is $77 per barrel. And so this is the average for the year. Our likely scenario looks between 90 to 110 US dollar per barrel. And of course, the unlikely scenario, which is the tail risk, it is between 110 and beyond. Again, our growth prospect that we shared this year, 45%, has taken into account the baseline and incorporated part of the scenario one of that we have discussed just now. So it has taken into account some of these considerations. But if things were to get worse under the tail risk scenario, for example, of course, I think there's avenue for us to always do a revision to our growth forecast. We did the same thing last year, given the tariff uncertainty. Because I think in doing forecasting, we need to be able to really sift through in terms of noises and also what are the real underlying changes that's happening. So this will also give us time to see what's happening and more data points for us to look into this. So that's in terms of the scenario. And basically, I would say that given the potential likely scenario and the baseline, our economy is able to cushion the impact. Malaysia, in terms of the reform subsidy, the reform rationalization that we have taken, the fiscal especially, that has created space for the government in terms of the electricity, water, diesel, and then RON 95. That has created space. And we were glad that we would be able to implement the reform during the window that we had last year. And of course, this is a space that provides governments with the ability to manage the current situation. As we always say that reform is important for us to create buffers for us so that we can use these buffers during difficult period, right? So we have heard from the government that in terms of supply, we have at least until May. And PM has also made a statement that while we know we have the supply right now, we are also continuing taking effort to identify new sources, new alternatives that we can also source supply. So that will also manage in terms of the price increases. Second is that in terms of the sustainability of fiscal. So that's where I think the space created is very important. And now, if you look in terms of how the reform measures was designed, for example, it provides the government with a few, I would say, levers for us to manage. Price is definitely one, and the quota is another one. So government has recently reduced the quota to 200. So these are the levers that we have that we can use, and depending on the situation that we face. Thank you.
Thank you, Governor. May I invite another round of questions? Yeah, the gentleman here.
Good morning, Governor. I'm Joseph from the South China Morning Post. Just a couple of quick questions. A follow-up on the fuel subsidies. The government, when Prime Minister announced the hike in the subsidy bill, there's like more than fourfold increase because of the Iran war. Following up on the sustainability issue, is it going to could it potentially eat into Malaysia's deficit target this year? And also on, what's the other question? Sorry, deficit and, sorry, I forgot my other question. Thank you.
Okay, can I have another question from the floor? Karina, in the middle.
Assalamualaikum, Sakarina from Bernama. Governor, there have been calls from industry groups, including Samantha and FMM, for the governments to introduce a stimulus package due to the geopolitical crisis. So how does BNM assess the necessity of such a measure at this current junction? And if no stimulus package from the government, are Malaysian banks currently in position to extend further support to businesses without the needs for additional government stimulus? Thanks.
Maybe I'll take these two questions first.
Okay,
Lisa.
sure, Governor.
I'll do the questions on the fuel subsidy in relation to what Melissa has asked earlier just now as well. Thanks, Joseph, for that question. And then I'll do in terms of the stimulus package. On the fuel subsidy, as I said just now, the reform measures that we took provide some space for fiscal. All right? And, you know, the government has also shown commitment in terms of our fiscal management, in terms of meeting our fiscal deficit target. And that's where we have the Fiscal Responsibility Act. And it's very clearly articulated, and we have a clear plan. For this year, the fiscal deficit is at 3.5%, so that's the target. And we have seen the track record of the government in terms of commitment towards delivering this. Under this current scenario, and given the fiscal space has been created, we believe that the government will be able to continue in terms of meeting this commitment. But of course, I think things could change. So that's where I think we need to really see in terms of the evolution of this conflict in the Middle East and what is the impact on global growth and what's the impact on oil prices and what's the impact on Malaysia as well. So that's where all the actions are being undertaken right now. I would like to share this, that the government has formed two very important committees. First is the Committee on Energy Security. That's chaired by the DPM, and for last 3 meetings, MK2 chaired the meeting. And we have all the agencies from KPD and KK, we got the Agricultural Ministry, we got Negara, we got Petronas, we got Suruhanjaya, Tenaga, and all the relevant agencies. And we'll discuss, and we'll look in terms of, first, how do we address the short term, securing supply, to ensure that I think we're able to get supply and able to deliver at certain cost. That's one thing. Second is that what do we do in the medium to longer term in terms of making sure that we look at what are the options available for us to source supply. And all these things goes into the M10 meeting. And M10 meeting now is every week. So that's where I think at the M10 meeting, we do all the assessment in terms of what's happening on the ground, what is our supply level, what are the potential sources that we have, what are the options available to us, and what are the measures that we need to take. These are being discussed there. So these are being actively looked into from time to time. And of course, so that's where the government has made an announcement in terms of while we may not be in a worse off situation as compared to some other jurisdictions or maybe in the Middle East, but actions that we could do now is to be more prudent in our utilization, in our usage, and so that we prepare ourselves if things were to get worse in the future. So, in summary, I would say that the government's commitment based on the track record is there in terms of meeting the fiscal deficit target. Going back to the stimulus package. Again, as I said, we are coming into this year from a position of strength. So we have to assess in terms of the impact as things evolve. In terms of stimulus package, we must take note that, acknowledge that we have come out from a few crises, especially the recent one is the pandemic. Post-pandemic, we have put in a lot of help in place. And all those helps that we put in, from government's fiscal support, from the banks, all the assistance, they are all still there on a targeted approach. So this continues, and banks are ready to help borrowers, corporates, SMEs, if they face any kind of issues, approach the banks. Then they can find a solution to help this. Second is that through the weekly meeting at the committee and the M10, the government hears views and perspective from the various segments and sectors of the economy. So one by one. So we hear. Let's take a holistic perspective and picture of what's happening to the economy. What are the segments that are most severely affected, and how do we provide targeted help to the segment? So it cannot be on a silo and sectoral basis, but it has to be in a holistic, looking at the overall picture and impact to the economy, then we can zoom in. Where do we need to put our limited resources in to address? So that is happening right now.
Can I invite another round of questions on economic topic? The gentleman behind here.
Hi, good morning, Governor. Silva here from Business Today. I've got two questions. One is just touching on the fuel subsidy again. With the cap announced by the government in terms of the limit, do you see the cost pass through by the supply chain affecting or seeping into the CPI and the PPI, hence raising inflation? So that's one question. The other question is, what are the scenarios that you see that you need to see before you actually adjust the B&M OPR rates?
Repeat the second question, please.
What would the scenario need to be before you see adjustments needed for the OPR rates?
Can I have another question? Okay. From Reuters, gentleman here.
Hi, Governor Daniel from Reuters. Here, hello. Yeah, so I'd just like to confirm your comment earlier, if I caught it correctly, whether B&M will be open to revising the growth forecast again, depending on how the Middle East conflict plays out. And secondly, your comment on Malaysia looking at various sources for energy. So could you say or indicate which sources, so like which countries and what type of energy, coal or renewable? Thank you.
Take these two questions first. I think I'll answer your question first in terms of the revision to growth. That's what we did last year. If things play within the scenario and the baseline that we work on, so it will stay that way. But if things goes for the worst, that's why I say it's tail risk. Tail risk, if things really gets bad, in terms of prolonged conflict, it becomes regional escalation, and it becomes massive destruction to the infrastructure. So that's when I think the whole world will be affected. So that's when I think, of course, we will look at this, and then if there's a need for a revised forecast, we will come out. That's what we did last year. But if things is within the parameters that we discussed just now, we will keep it that way, and we'll see how it goes. And in terms of the various sources, I think I don't think so I have the authority to share all those things, but suffice to say that at the meeting, at the committee meeting level, at the M10 level, various options are being explored into, and in terms of various areas, and also various types of energy. Yeah, so it's very broad. I hope that answers the question. Okay, now on inflation and also MPC. I'll touch something on inflation and then on MPC, and I also get my colleague Ejisham to come in a bit more in terms of the cost pass-through, especially from the inflation perspective. Okay, I think when we said inflation is projected to be between 1.5 and 2.5% this year. Why? Is because we assess that external cost pressure to be manageable. But of course, I think this is still subject to the global developments. And the underlying inflation is also expected to be manageable. And this reflects the steady domestic demand and the moderate domestic cost pressure. And more broadly, because what we have the domestic policy measures like the Budi Madani, that will also help limit the pass-through of global cost shocks to domestic prices. And third is that at the same time, risk to inflation outlook, of course, will continue to be influenced by the global commodity prices and related cost pressures, including the energy and food-related inputs, which again, I think this remains uncertain. And that's it. The cost pass-through is likely to be gradual and also uneven. Firms may adjust prices gradually, or some of them may even absorb costs given the demand and also competitive pressure. So it depends on how much the producer will then transfer the cost to the consumer. And the impact will also be likely more sector specific, with pressure more pronounced in the fuel and transport intensive sectors rather than broad-based across the CPI basket. And on this, for example, like even the design of our subsidy rationalization, in particular diesel, for example. So we try to exclude, to continue to provide subsidy to certain sectors, those that's involved in transportation and logistics, so that the pass-through in terms of cost increases will not be as bad to the economy. So these are things that's already in place to help manage in terms of the cost pass-through. I will invite Dr. Sham to touch on the inflation later on again, but let me go to your questions on the monetary policy. I just want to I'm sure there'll be many other questions here as well, but I thought it's good to just share some perspective from our thinking on this. I mean, if you look in terms of monetary policy, under this kind of scenario, it's a supply shock scenario, right? I mean, the conventional wisdom, normally people apply a look-through approach. Therefore, MPC is definitely not on a preset cost, right? And MPC also, we do not respond mechanically. And we normally consider the impact to inflation and growth in a holistic manner. While supply shock could have increased oil prices and could have an impact on the domestic price conditions, we also need to see what's the second round impact on input prices and also on consumer prices, depending on the producer's appetite to transfer the cost to the consumer. And also, I think we have to be mindful and look at demand conditions. When prices goes higher, of course, there could be some adjustments to demand as well. So it's not a straightforward kind of case. And that's why we need to have sufficient level of information about the size and severity of the shock. And therefore, we will have to look how broad-based is the price increases. For example, we look in terms of the pervasiveness. We look at the persistency of the price increases and how this could also have an impact on wages and also demand, right? So we need to see all these dynamics at play. There's a lot of dynamics at play, and to help us to assess the balance of risk to both growth and inflation. And in this regard, we are committed to our mandate. As you know, it's clearly our mandate of price stability is conducive to sustainable economic growth. And again, so this way we'll continue to be vigilant and look out for incoming data, both at the macro level. And as you know, we do a lot of micro surveillance on the ground. So we look at all these data points to see what's the appropriate actions or appropriate monetary policy stance that we want to put in place. Let me just invite Sham to come in a bit more on the from inflation. Great.
Yeah, thank you, Governor. I think when we look at in the context of costs and prices, it's always good to take a step back and remember our starting point. First is that currently our producer price index is very low. It's in fact has been registering a negative growth in the past few months. Second is our inflation rate is also relatively very low at about 1.4%. That's first one. Second is that, of course, as Governor mentioned, the higher energy prices would translate into higher transportation costs and other costs. And the first impact will be on the producer price index. What we have seen in the past is that the transmission from producer price index to the CPI is gradual, uneven, like Governor mentioned. It's also tend to be rather limited. And this limited pass-through is also attributable to particularly two factors. The first is that the policy measures that the government has in place, including, again, as mentioned, in particular, the subsidy on diesel, targeted subsidy on diesel that to limit the impact on logistic and transportation. And the second is also in terms of the active monitoring and enforcement done by the KPD and KK to ensure that there is no excessive and opportunistic price increases. So these have contributed to the past experience that show the rather limited and gradual pass-through from higher cost to headline inflation. Thank you.
Thank you.
Perhaps we can move on to the next segment on the financial sector topic. May I call question from, the lady in front.
Very good morning, Governor. This is Dania from News Straits Time. So I have a question on the dividend payout for the government. So with the profits and assets declining in 2025, how will Bank Negara Malaysia balance paying out your dividends to the government and maintaining the adequate reserves?
Maybe let's show the slide that we have on the Bank Negara Malaysia's finances. Okay, I think as you know, last year we made a net profit of 12.5 billion and we declared the dividend to the government at 5 billion. And we have a policy in place in terms of how do we actually transfer the dividend to the government. And from our profit, we have an internal policy where a certain percentage of the profit will go to our general reserve and the balance will go to the government. So right now it's about 60-40. That's the arrangement that we have.
May I invite other questions on financial sector topic? From the lady here.
Hi, Governor. Jocelyn from The Edge. So I actually wanted to ask about the current state of the ringgit. And so will there be, currently the ringgit was strengthening, and of course that was taken into account of the current forecasts, but there's a slight shift of the USD strengthening because some markets are saying that some countries are kind of purchasing gold. So what could be the driving the slight shift at the moment? And also I wanted to ask in terms of the difference in scenarios actually, because the Ukraine and Russia war started in 2022 and it's been about 3 to 4 years. So how does that differentiate it? What's the difference between then and now in terms of like Malaysia's position as being an energy exporter and also an importer? And because with that war, it resulted in sanctions and rerouting. So in the event, what's the difference between the two?
I'll clarify. I think your question was in terms of ringgit, more in terms of factors driving ringgit performance. And second, the difference between what we are seeing during Ukraine war and also this conflict in terms of the impact on the economy. Okay, thank you.
Can I invite another question, perhaps? The lady here in the middle.
Hi, I'm Laila from RTM. My question is, financing to SMEs grew, but are there still gaps in the access to the credit, especially in the smaller businesses with these uncertainties? Thank you.
Perhaps, Governor?
Yeah, is there? Okay, I will answer the first question on ringgit, the drivers for ringgit performance, and also just a bit on Ukraine, because not much I could share as well, because I think every conflict, every crisis, every challenges are different. And of course, I think Ukraine was rather contained. And we do see in terms of oil prices increase as well. But this Middle East conflict is a bit different. And we do not know how this could escalate. Because this could even escalate to become a regional conflict itself. And of course, the implications may be greater if it evolves towards that direction. Yeah. So I will not say much on that. But on the ringgit, I think, of course, ringgit, the movements will reflect global developments. Of course, we have the US dollar position in terms of the weakening of the US dollar or the strengthening of the US dollar. But of course, I think we have the domestic factors as well. I'll even get the Adnan to come in to add on this as well. And later the Adnan to come in also on the SME financing. And ringgit, as you know, will continue to be market determined and reflect the global developments. And the outlook for ringgit remains positive. And what has driven the ringgit so far? One's definitely in terms of the position of the US dollar. Second, in terms of the domestic factors, which is in terms of the fundamentals that we have is very strong. So that's where I think people look at the fundamentals. And we have strong economic prospects as well. So those are the factors that supported the ringgit, and it will continue into this year as well. And third, in terms of the reform measures, so the commitment to reform measures, that will also lend a more enduring support to ringgit. And then fourth, we have adequate reserve. That is also something that people look at, and also in terms of resilient external sector and investor confidence. So those are the factors that drive ringgit. In addition to that, in Negara, we also do a lot of engagements with the investors, engagements with the exporters, importers, corporates, to encourage them to also repatriate their export proceeds, their investment income back into Malaysia and to convert into ringgit. And to address some kind of frictions that they have raised in the past in terms of, I think, once they convert into ringgit, if they were to go out again, they have to come back to Negara for approval. We launched the QRI program. So this is the kind of program that encourage them to do so because they know that we give them a green lane when they want to go out again in terms of investment overseas. So these are the kind of factors where we continue to be there. But of course, I think the current Middle East conflict will definitely have some movements in the ringgit, but these are cyclical, these are sentiments, but more importantly is the underlying strength that we need to look on. So over time, investors will look in terms of and sift through all this thing, and the underlying will be the main factor that will be looked into. And we have seen healthy flows of capital flows into the economy as well, into the financial market. And we see a lot of stable investments coming into the country. In fact, we also see new names coming into the country, thanks to the engagements that we have done when we meet investors overseas. And we have seen interest from many of them, and we have seen them coming into the Malaysia's financial market as well. So that has helped to support ringgit, and that will continue to support ringgit as we move forward. And let me just say a bit on the financing. Yes, financing so far is good, including for the SMEs. I'll get DG Azlan to also say a bit more on this financing for the SMEs and what we are doing. We are monitoring this, meeting them. And the network that I mentioned just now, DG Azlan is chairing that network. And if there's any issue, please come forward to us and we'll see what we can do. Let me now invite DG Azlan to say a bit more on ringgit and DG Azlan on SME financing.
Yeah, if anything, I can add just to emphasize what Governor has been saying. I think the trajectory for the ringgit is to remain resilient. The fundamentals are quite strong, or that we have built over the past 2 to 3 years. This has strengthened further. And I think we can see that in the robustness of the FX market itself. I mean, volume remains at very high levels. That shows that the foreign exchange market is highly liquid, and businesses and corporates are able to transact with no issues with respect to liquidity. And I think if we also are very committed to continuing the engagements and the initiatives that we've done over the past 1 to 2 years, repatriating income and getting corporates to convert, encouraging more use of ringgit as even as an operating currency for many of the MNCs, and we continue to engage with various corporates. I'll just add a little bit on the financial sector engagement, Governor. I think this is a more recent initiative that we've started. It has risen out of our observations together with the industry that there could be various knowledge gaps that we can see between the finance sector and the industry. So this engagement is to bring together both industries such as shipping, aviation, E&E sector, together with the banking and also the insurance industry for that matter, to see where these knowledge gaps so that can be reduced, so that intermediation and financing for these sectors can, I suppose, be further enhanced, that the financial sector is able to really effectively engage with industries across the economy. Yeah, so we've just started that. We just had our first series of engagements, formal engagements this year. It should continue for this coming. Yeah.
Maybe you want to share in terms of your engagement with the financial sector, financial markets, the Financial Markets Committee.
Yes. So we also, if the Financial Market Committee has been around for close to 10 years already. And through the Financial Market Committee, which is represented by a number of the financial institutions, as well as from corporate sector, from corporate treasurers, we share observations on and perspectives on how the financial markets are responding to current events. And in our last more recent meeting, maybe about 2 weeks ago, most of what we see is that Malaysia is certainly, the observations from market players is that Malaysia is kind of like viewed quite positively with respect to where we have come the past 2 years, but also with respect to how we are performing against vis-a-vis many of our partners. So the sentiment on Malaysia is actually quite positive compared to other to meet perhaps some of our peers, and this helps ringgit to show a stronger performance, as well as we see various flows into our markets. And I think for the most part, most of the financial market observation is that we have been able to withstand the pressures thus far. And notwithstanding the how ringgit has traded or the technical correction that we've seen the last 1 or 2 weeks, ringgit continues to be quite resilient, and the outlook does remain fairly resilient for the ringgit to continue its performance. Yeah, thanks.
Thank you, Governor. The loan growth to the SME sector has been robust last year. I think grew about 5.9% last year. That's like 4 out of 5 SME loan application being approved. We expect the loan growth to continue to be resilient, as Governor mentioned, that we are entering this period of uncertainty from a position of strength, and that applies to the financial sector as well, where there are strong capital and liquidity buffers. Our own stress tests indicate that they are able to withstand a crisis that is even more severe than the Asian financial crisis or the COVID environment. So we expect banks to be able to continue lending, but to cater for this period of uncertainty, we also have products, for example, credit guarantees from CGC and SGPP, which should help. In terms of assistance, they remain available. Banks are more than capable of providing restructuring and rescheduling of current loans. On top of that, AKPK also provides similar services to assist customers should the need arise. Thanks, Governor.
I'm mindful of time. Governor, if okay, can we close the Q&A session? Okay, thank you very much, ladies and gentlemen, for all your questions. We have come to the end of the press conference today. Governor, may I invite you to give your closing remarks?
Thank you so much, everyone, I think, for all your questions and for being here today. And our flagship publications are publicly available now on our website. We hope you have a good read and find the insights valuable for your media coverage later. And we appreciate your partnership in ensuring these messages reach to a broad audience. At this juncture, I want to express my sincere thanks again to all my BNM staff sitting with me here today and also over there, and they're all behind it as well. To all of them, to all your hard work and also dedication. Thank you so much for that. I'm truly grateful that I have a team that understands the importance of what we do and the need to communicate it clearly and effectively to the public. With that, everyone, have a great week ahead, and terima kasih and selamat menyambut Hari Raya. I think it's still 1 month, right?
Thank you, Governor.